Let's see what we can do. What we can do. We can do what we can do. What we can do. All right. Hopefully everything sounds good. Let me open up and have a look. So far, so good. So far, so good. All right, here we are. Here we are. Damn. Well, let's get started. What up, gentlemen? Welcome to this live stream. We do have certain things on the agenda today. Let me set up Arc here. Make sure everything is good. Make sure everything is good. Minor panic. What's going on, brother? Okay, so we're long here, which is not normally when I would be trading, but again, this was simply too good to ignore. So I decided to put on a position with, you know, medium risk attached, about half of what I normally would. Why? Well, because on a larger scale, right, zooming out to the 15-minute time frame, we are delivering and coming right off the optimal trade entry of the entire range that we're looking at here. And if I now zoom into a 5-minute time frame, if I draw my optimal trade entry from this low all the way up to this high, so the internal range, you can tell that the optimal trade entry is within my stop loss, which is exactly what I want. Now, on a 15-minute time frame, this low here is a very specific low, okay? So this is what I like to call the turtle soup low. Despite the funny name, it's quite a useful model, especially if you're looking for sort of reversal trades, right? And it's basically when the market creates a low within or a high within a fair value gap, but it fails to fill the entire inefficiency. Those are typically liquidity sweeps low, meaning the market is going to run down, wipe out the orders at that low, and then continue in the opposite direction. But of course, right, you need a target. But I do have that because moving into a 3-hour time frame, we have an unmitigated 3-hour imbalance up here. So this is quite a large inefficiency within the market. And so I expect price to come back up here to sort of fill in that inefficiency. So I'm risking about $3,100 to make about $9,300. Again, this was also sent out to the Telegram here, just like any other trade that I do decide to take. So yes, overall though, I don't think Bitcoin is super interesting these days, if I'm being totally honest with you. But we can go over it, right? So first of all, I want to just show you this, right? This is the DSS Preserved, and I don't think you should be using these indicators as a be-all or, you know, be-all end-all. But I do think that if you use these indicators in combination with the underlying macro environment, that's when they really shine, right? And so every other time we had a cross on the DSS Preserved here on Bitcoin, well, then that marked the bottom of a pullback. And so most indicators that we actually look at suggest that this is nothing more than a mere correction within a very healthy uptrending market, right? The problem is all the attention is going to other assets, right? I mean, have a look at silver here. Silver is just on a parabolic run, right? I mean, a ridiculous run. Probably never seen something like this in my nearly decade of being in this industry, right? It's honestly unbelievable. And so all the attention is flooding the precious metals, right? And that takes away attention from assets like Bitcoin, right? And I see a lot of guys, you know, that are out there trying to justify or trying to almost say that Bitcoin should follow gold and silver. But I mean, that's just ridiculous, right? And I want to show you this post here. I want to show you this post. Did I even post it? Yeah, so we have this one, right? This is the Bitcoin Global Liquidity Oscillator and the Gold Global Liquidity Oscillator, right? So this is kind of the historical under or over evaluation, right? According to its historical trend. Right now, Bitcoin is at the same lows that were made right before the 2020 rally, right before the largest bull run that we've ever seen. And if we have a look at gold, we are almost at the 2010, 2012 highs here, right? So I mean, we're at decade highs here on gold, and we are at decade lows here on Bitcoin almost, right? And so where do you guys think opportunity actually forms, right? Do you think it forms up here, right? Have a look at 2018. Do you think that's where opportunity forms? No, obviously opportunity is going to form down here, right? Because that's what's going to allow you to capitalize on. Oh, hold on. Can't even see it. What the hell? Maybe I need to free up some space here. Give me a second. Give me a second. Oh, there we go. Should be better now, hopefully. Okay, so as I was saying, right, what do you guys personally think opportunity is going to form, right? Obviously, it's going to form when Bitcoin is, massively undervalued. I mean, it should speak for itself, right? And no, Bitcoin is not supposed to move in direct correlation with assets like gold, right? Let's see this position here starting to look a little red, which is okay. We actually haven't had a singular loss in 2026 so far, so maybe this is the first one. But what I was saying is, right, it's not supposed to follow silver and gold, directly. It's going to lag behind inevitably because of where it sits on the risk curve. Right. So when we look at assets like gold, this is something that people have used as a store of value for hundreds of years, right? Even thousands of years. This has been used as a store of value. And so obviously this is going to run way before Bitcoin will, because people have way more faith in an asset like gold, right? And silver for that matter. It's been around for way longer. It's been used as a store of value for God knows how long. Bitcoin is a fairly new asset, right? And it's still considered a risk on asset, meaning the investor risk appetite needs to be there in order for that to rotate, right? And if we have a look at the risk curve, you can see that things like the gold, the S&P 500, and also silver sits in what I would like to call the low risk appetite category. That's when investors are, worried, or they have concerns, or they're not, super confident in the economy or the geopolitical situation. And so they're going to pivot towards assets like gold and silver, right? It's going to happen during high tariffs. It's going to happen during, basically a lot of uncertainty. And then later down the line, once their risk appetite has built up, significantly enough, crypto will inevitably follow, but it's going to take a while. But actually, one of the things that we can use to determine where the investor risk appetite is sitting right now is the Russell 2000, okay? So since January 1st, the Russell 2000 is up around 10, nearly 11%, right? Which for an asset like the Russell 2000, which is the small cap index for the US stocks, is quite a lot, right? And that basically tells me that the investor risk appetite is returning and the capital is rotating, right? So the capital is rotating, it's not exiting. Because if the capital was exiting the market, well, then the Russell 2000 would look more like it did here in 2025, right? November. Then it would look like this. So it's actually a good sign. And another thing that a lot of people just seem to not understand is the fact that gold and silver are not enemies to assets like Bitcoin, okay? They're not at all enemies, right? they're just going to move before Bitcoin, and inevitably Bitcoin will follow. It just takes a long time because it's a risk asset and gold is not, right? And I know a lot of people are sort of bearish, if you will, on Bitcoin, but I mean, just zoom out for a second, right? We're stuck in a consolidation before hopefully the next move higher, right? And this is completely normal, right? We're still within the uptrend. We have not even printed a single lower low here, right? So we have higher lows that's followed by higher highs. We are respecting previous resistance, now turn support, right? And so there really isn't a lot that points towards a bear market, not from a technical analysis point of view or from a macroeconomic point of view, right? What could further explain the sort of boring price action that we're seeing here is the fact that QT has ended, right? Investors, they need to reassess their expectations. The market and the economy still feels the after effects of the tightening, just like in 2019. We had over 200 days of choppy, boring, consolidating, or even bearish price action before the massive move higher, right? And so we can, with reason, expect that exact same playbook, and that's what we're seeing now. And so nearly no matter what you look at, it just screams bullishness. I mean, quantitative tightening, or QT, has ended after we have been in very tight liquidity conditions for multiple years, right? And what that's going to do is not allow for the investor risk appetite to grow, because assets like Bitcoin is going to, respond heavily based on expectations, right? And when we are in quantitative tightening or QT, right, then that basically means we're operating within very tight liquidity conditions, and that's inevitably going to shrink their confidence, right, or their expectations regarding liquidity, because it's so tight. But that has just ended, right? So we can finally see those expectations return to baseline. And it looks like we are seeing that, because otherwise the Russell 2000 simply wouldn't be on a massive rally, right? There's also a good chance that we're going to see tariffs getting banned going into 2026 here, right? I mean, the Supreme Court is probably going to vote against the tariffs. And what that could do is boost production inevitably, right? Bring new orders and inevitably push the ISM Purchasing Managers Index into expansion. And as you guys can see, this here represents, every single Bitcoin bull run basically that we've had. And so all bull run starts when the ISM PMI is in contraction, which is below the threshold of 50. And that's where we are right now. We just need some catalyst that can take us into expansion, right? And we have rate cuts coming out, which is inevitably going to boost production, right? And we don't just have any rate cut, right? We have a bunch of rate cuts coming, most likely, right? I mean, we're likely going to go from about a 3.75%, if I'm not mistaken. I think that's what the interest rate in the US is sitting at right now. Like, there's a good chance that in 2026, we're going to see a rate cut from 3.75%. And then Trump's target is 1%, right? If that's going to happen, the investor risk confidence is going to skyrocket. And yeah, that's going to boost metals too. Of course it is. It's going to boost metals a lot, right? But metals going up is actually a good sign for assets like crypto. But what it's also going to do is potentially allow for the ISM PMI to finally start expanding instead of contracting, right? And then start the next Bitcoin bull run. You might sit there and say, there's no way we're going to, go from 3.75% interest rates all the way down to 1%, even though Trump wants it, because he has no direct influence on the Fed. And that's right, he doesn't. But what he can do is appoint a new chairman, because Powell's term has ended in 2026, or it will end in 2026, right? And so he is, without a doubt, going to appoint a chairman with similar goals in terms of the interest rates as him. And therefore, he will get exactly what he wants. I'm just going to lower this slightly so we follow the plan. I would actually prefer to have my... Let me remove this. I would most definitely prefer to have my stop at the low down here, but it's just a little too low for me, to be entirely honest. But yeah, I mean, 2026 is honestly looking great, not to speak of things like the Clarity Act, right? I've already went over that way too many times at this point, but I genuinely do believe that we could see, billions of dollars in institutional capital going into 2026. Of course, there were risks attached to this position too, because we're coming directly from an hourly imbalance here that price really seemed to hold and respect, right? But then again, I thought that there was a significant chance that we were gonna visit the 3-hour imbalance up here that we that we haven't yet. But we'll see. It is what it is. All right. Hopefully you guys can see it. I don't know. Yeah, there we are. We're out of that play. That's all right, though. Update here. From a bearish hourly one, fair value gap. All right, let's see if we can find any other place today. Again, probably going to prefer bearish price action over bullish here today, but I do still think that there's a good chance that we're going to revisit the 3-hour imbalance that we have up here. But again, time will tell. Time will tell. There are so many bots on Kick. What is going on? Let's see. It actually does look like a market maker sell model here, if I'm being, totally honest. This being, the first stage, and then this down here being the second stage. But perhaps even a play lower wouldn't be terrible thinking. Let's see if we can close below this imbalance that we're looking at here. Might actually aim for a short. But again, we'll see. We will see. In 10 minutes, we should close below this 15-minute imbalance. And if that's the case, well, then I'm pretty confident that the next target for price is the lows that we're looking at down here, the equal lows, right? It's not a bad breaker here. This is not a bad entry up here. Let's see. Okay. So this is one way we could get down lower, is the bearish breaker that we're looking at. But we'll see. Yeah, we're probably just gonna run directly these lows, to be honest. Damn, we're bearish, man. But it's just so difficult because on a larger scale, we're just trading within this damn range here. So there's a new bias going into every single day because of the range that we're just chopping around in, right? Damn, I do kind of like this play. I will not lie to you. I do like this play up here. Let's see. I'd really love for it to overlap a little bit more with equilibrium here, but it's not too bad. You see something like this here, wouldn't be terrible. This wouldn't be terrible. Not at all. Not at all. Let's have a look at the volume profile. Yeah, it's not bad now. I like the point of control sitting here. Even the order blocks look quite nice. I'll give this short a shot. I'll give it a shot. If we run lows, I cancel the order though. But I like this short. I really do. In an ideal world, we wait for the 15-minute close, which is in 7 minutes, because that should ideally close below the gap that we're looking at. And if that happens, well then we are probably, you know, pretty bearish here. Let's see what we can do. I like, we have a reclaimed order block. I see two potential reversals here, right? Because we have the reclaimed order block that overlaps perfectly with the bearish breaker, which also aligns quite well with the equilibrium of the range. But then we have the optimal trade entry up here with, you know, the volume, the point of control of the range sitting right there too. We're just gonna have to see. We're just gonna have to see. Let me go grab a can of Coke. 1 second, gentlemen. All right. Media sauce. New capture. Let's go. Damn. Counting up racks every day. Let's go. All right, let's see what we can do here. Let's see what we can goddamn do. I mean, we have this closure in 3 minutes and 30 seconds. If we close below this fair value gap, to me that pretty much confirms the order flow is indeed, you know, bearish, and we're gonna run the equal lows down here. Why? Well, let me explain why. If we end up violating this bullish imbalance, right? Here's the thing. Then we're coming off of a bearish imbalance that held up really nicely, and price pushed directly through a bullish one, which, you know, immediately tells me that bears can successfully, you know, defend their own imbalances, PDRAs, whatever you want to call it, but bulls can't, and that puts bears in control, right? And so what we're looking at here is actually not terrible, but we're just gonna have to wait 3 minutes here for the close, see what happens. See what happens. Yeah, we got 2 more minutes. Damn. Let's run Twitter for a little bit. See if there's anything of interest here. Perhaps. Perhaps. Oh, these girls gotta go, bro. What do you call someone who buys silver here, bro? Let me tell you this. Yesterday, I saw a video on my Instagram of a pawn shop selling silver that was literally completely out of control. You have no idea. People were lining up to buy silver at the highest price I've ever personally seen. So a lot of people are willing to pay the price of silver right now, including China, by the way. China are buying enormous amounts of silver, or have been. I don't actually know if they still do, but they certainly have been creating a lot of demand. Let's see. I mean, this is, in my opinion, just a perfect market maker sell model. It literally does not get any better than this. I'll be so real. What we could actually end up doing is taking the optimal trade entry play that we're looking at right here. That might honestly be what we're doing. Let's see if we can end up getting a fill here, because this is the picture perfect continuation model if that were to play out. So we'll see. Perhaps a short here from this, including the breaker and the order blocks, wouldn't be terrible. Targeting the equal lows for about a 2.2 R. Not terrible, not terrible. Bro, fucking chicks these days getting out of control. Yeah, I don't know if we're actually going to be able to get filled here. We're going to have to see. We are going to have to see. I don't even got. Okay, let's see. Let's see. Let me update the Telegram really quick. Okay, let's just try and get this order out the way. I don't understand why it gives me partial TPs actually. We don't have a lot of capital to work with here because I have so many orders on. Yeah, let's open up. That's fine. About a 2.2, 2.3 R here, 2.2 R. Let's see. But you see, it's completely and utterly different. It's just not the same at all from exchange to exchange. So we're gonna have to change this around a little bit. Fucking Binance is just miles different compared to WeX, but it is what it is. All right, let's see. We got quite the displacement candle here. Again, this is quite literally the picture perfect continuation model, as I like to call it. Also, the main model that I taught in the free video course that follows along with the Telegram membership, which is also free. So quite literally entirely free. And that has been my primary model for the past 7 years or so. So I kind of have to execute when that appears. Bro, why is it that every girl in Dubai is fucking doing real estate? What the fuck is it with that? So mad. Getting out of fucking control. Okay, let's see if we're gonna get filled here. Actually, let's check. Let's quickly have a look at the Bitcoin dominance on a 5-minute. Ideally, this goes up from here, which actually we do have a lot of momentum behind it now. Not terrible. It's not terrible. Got the breakout right as we got filled here. Okay, so let's move our stop into the correct place. There we go, and then our TP follows. Again, last play of the day here. I'm willing to give the market one more shot, and if it decides to go higher from this point forward, I'm not interested. I'd rather stay out, save my capital for another day. Which actually does look like we're just going to rotate straight to that 3-hour imbalance that was our previous target. Which again, very unpredictable. We're not sweeping highs, we're not sweeping lows. I mean, getting out of control. So perhaps this is just a day of sad price action, and we're just gonna have to deal with the consequences. What type of how's the economic calendar looking for later? Yeah, we got nothing, bro. We got nothing. That explains it. Nothing yesterday. We got nothing today, and tomorrow we have FOMC, but it's not the yeah, it is actually, isn't it? I think tomorrow might be. Yeah, I'm out there. I'll call it a day here. I'm done. The first loss I took in 2026, and I got 2 on the same day. How unfortunate is that? Unfortunate day of price action, but it is what it is. Unfortunate, but what a terrible day of price action. My goodness. But again, looking looking at the economic calendar, it does make sense. I mean, tomorrow we have Canadian BOC monetary policy report and rate statement and overnight rate. We also have the press conference for the US. We have federal funds rate, we have the FOMC statement, and we have the FOMC press conference, right? So today and yesterday was just super low in terms of economic data, which also means there's likely not going to be a bunch of volatility, right? And that's also why we're seeing, this weird price action, because the volatility just isn't there. The normal people that are within the market during these hours are not here because they're waiting for the news to be released tomorrow, right? And so that is exactly what I should have done as well. But every rule was followed, every box was ticked, and that's all that matters. But I actually quickly want to talk about the dollar, right? Because a lot of people are not focused on the dollar, even though this right here screams that Bitcoin is going to go higher. Okay, it's almost like people have forgotten what Bitcoin stands for, right? So the dollar is currently selling off. Why? Because people do not trust the US dollar as much as they previously have, right? And their trust in the US dollar continues to shrink day by day. Right now, the US is planning on selling their dollars to buy more yen, which is gonna, further devaluate the dollar, right? We're also expecting all these rate cuts that I talked about earlier, which is also gonna weaken the dollar even further. So again, I've said this before, my US dollar target for 2026 is gonna be the lowest that we're looking at here. And if that's the case, well, then I do think it's inevitable that Bitcoin is going to have a massive rally. I really do. And again, when people start losing faith in the fiat system, right, they're going to eventually pivot towards assets like Bitcoin, right? Because that's literally what it was made for. Okay. So I personally think that this is great for crypto. And yeah, a lot of people are like, well, all that capital is just going to flow into gold and silver, as we're seeing right now. And you're right, it is, right? Because the dollar going lower and lower and getting weaker and weaker is also bullish for precious metals such as gold and silver, right? But inevitably, Bitcoin is going to follow. It just takes a while because it sits way further up on the risk curve, but inevitably it will follow. I have a very dry mouth today. Dun, dun, dun. Hilarious. But yeah, as said, I don't think this market here today is for me. I don't think it's wise to risk more capital. What I already risked was fine. That's fine with me. Again, about a half of what I normally would risk. So, you know, that's still perfectly fine. But because of the lack of economic data, I just don't think it makes sense to continue today. I think tomorrow is really where the interest is going to come, right? Because of all the news. So perhaps tomorrow night we'll host a live stream and actually be able to participate in all the volatility that's going to come, right? Because that's exactly what I like to trade. So thank you so much for watching. This was a short live stream, but again, the market just isn't there, and I'd rather just sit out, wait for tomorrow, and save my capital for a better day. All right. Again, first loss of 2026 came today, which is fine, because again, I've been green pretty much every day in January so far. So the fact that we took a loss today was kind of inevitable, right? It had to happen at some point. So that's fine. We're still up heavily, you know, on the year. And hopefully that will just continue, because again, despite Bitcoin being extremely boring on an intraday time frame, you're still able to capitalize quite a lot, right? And so that's the beauty of trading, that regardless of the market condition, if you're experienced, you can still make money. And that's exactly what we love. So thank you so much for watching, ladies and gentlemen. Hopefully you'll tune in tomorrow, where the live stream will, you know, potentially be a lot longer than it was today. And hopefully we have some economic data to react to, and that will bring some volatility into the market that can benefit us.